Hi there, guys. Nice to meet you all. Uh, we are waiting for other people to come. Please don't hesitate to ask your questions. So we are starting in several minutes. We are starting in several minutes. Okay, guys, for those who are missing today's stream, will be the opportunity to rewatch it again because the stream will be available recorded on our channel. So today we are here to discuss the upcoming event, namely Halving on BTC. Let me make sure everyone is here. Please put pluses in the chat, and I repeat that don't be shy to ask any questions. What we should start with. The topic is really important. What is halving, first of all? We should start with the definition. The halving, which happens every 4 years, is when the rewards for mining BTC, for mining Bitcoin, are cut in half, which should reduce supply and increase demand for the cryptocurrency. The cryptocurrency is made in such a way that the tokenomic implies that the inflation is impossible. As we know, for example, on the basis of fiat money, the cryptocurrency has really admirable advantage upon fiat money. So here you see the Bitcoin block reward halving countdown. That's extremely interesting and historical event that we are waiting to come in 1 day, 30 hours, 43 minutes and 30 seconds. That's really awesome to watch what will be just at the exact moment of halving. Today we will talk about what is halving, the history of halving, what was the first reaction on previous halvings on different, not only on BTC but other halvings, because all most altcoins, most cryptocurrencies have their own halvings, and we will watch the history. So what's interesting that the number of Bitcoin entering circulation every 10 minutes, known as block rewards, will drop by half from, let me see, from 6.25 to 3.125 BTC. It's an event that is easy to see coming because it happens every 210,000 blocks, and it usually takes for BTC approximately 4 years. And it has happened 3 times since 2009 when BTC was created. And the principle, as you already got, I think, is to avoid inflation. And the most interesting question you would probably ask, who is responsible for the supply? The BTC is made and the cryptocurrency is made in such a way that the system itself, the network itself, autonomously uh, produces new blocks. That's how it works. So the next aspect that we should really discuss is the history of halving, because many people sure that for most traders halving is the certain time to make big money, to make really good profit, but we will discuss this aspect today. Um, the BTC itself, previously, of course, the growth of the BTC followed by this event, but what are the pitfalls? Of course, we should consider the pitfalls. It's perceived by many participants as easy money, absolutely easy money. People think that they start buying during halving, but in fact, it's too late. In most cases, it's too late. Okay, let's see some information on the website. You can join bitcoinblockhalf.com. Here you will see all the core information about the BTC halving and what's interesting. As I already mentioned, who controls the issuance of the BTC, the network itself, 21 million bitcoins to ever be produced. The total supply of bitcoins will be 21 million BTC, and if I'm not mistaken, it will be the last block will be produced in 2145, if I'm not mistaken. By that moment, I will be already dead. And maybe our children will witness this historical moment when BTC block reward will be finished in approximately by year 2140. I will start to live until this moment. But anyway, that's absolutely genius. I think it's genius and autonomous system to fight not only fraudulence but inflation. Let's discuss the next really important thing, that the past halving price performance. As you see here on this screen, this is the history of BTC halvings. If I'm not mistaken, it's spot, but it's BTC US dollar 1 week time frame, as you see. So what did we have here? The most important thing, that every time we have this event in the past, every time we witnessed the same, almost the same pattern, consolidation with many touches to a kind of level, 1 week or even 1 day level, really strong level. And then we see that when halving starts, what do we usually have? We have small correction, and then for the next several months, we see really stable growth. The growth with some corrections, but anyway, our previous BTC halving made all-time high, if I'm not mistaken. As far as here we deal with BTC US dollar, anyway, we will watch the same with the BTC to USDT. The principle is absolutely the same. We see the touch to the certain level. As you see, the second halving, the same, we have small correction. Then we break the structure and see the really uh, quite obvious growth. Here we see a kind of highs as well, then kind of inclined level, and what do we expect? Small correction, then the breakout retest, and again we have a new bull run market. Especially, I should mention that it's really the stability of the growth, and the power of the growth and the length of it, of course, depends on the news, political, geopolitical, and other backgrounds, other background factors. What positive moments do we have now? First of all, the approval of Ethereum ETF. I think that if it's not coincide uh, with the halving itself anyway, it maybe will be in the same time fragment that will probably, of course, be the launcher, a kind of launcher for the long and stable growth. But anyway, we should take a closer look to this kind of correction that could probably be, and let's discuss it in more details. First of all, first of all, Uh, let's see the example of LTC halving of August 2023. Uh, just a moment. I will check your questions. Do you have some questions for me? No questions yet. Okay. Let's see the example of Litecoin halving. It's extremely important. Why this happened? I will show you. This is the daily graph of Litecoin, and here you see the Wednesday, August 23, 2023, the moment when absolutely the same event happened on the LTC USDT Litecoin instrument. And what do we have here? From this day, the asset lost 38% in price. There was a really massive drop. Why this happens? Maybe some of you have some ideas. Please put your ideas, write your ideas in the comments. I really is curious to see what do you think, and we will continue then. Okay, in fact, the reason is just huge participants start loading positions months and years before this event, before the halving, uh, to fix in order to fix their positions during this event itself. What I mean, let's imagine that we are really a huge fund. We start loading the position months before the halving. We are loading, and then on the day of this event, we start fixing. Why this day is the most preferable day to fix really huge capitals, really huge sum of money? Because First of all, those retail traders, hamsters, as we usually call them, most people, that's a kind of a psychology of masses, think that halving is easy money, and many retailers just try to long by the market, just load long position with leverages and so on. And in fact, why they lose? Because thanks to them, those huge, really fat guys fix their positions with the help using the positions of the purchases of market players, small market players, and retail. That's the truth. That's how really big bosses, really fat guys, banks, huge players, institutional investors usually make money. Uh, their massive sales finally create short-term downfall. In this case, in case of LTC, that wasn't short downfall, that was a really massive and long-run downturn with very weak correction back. And as you see, nothing, almost nothing has changed. It took about it took about 1 year to restore the price for LTC USDT. Of course, a lot depends on the instrument because there are many instruments with different backgrounds, with different uh, market capitalization and so on. And the BTC is of course something special that's not extraordinary. First of all, it's the very first cryptocurrency, and I don't think that there will be massive downfall, but anyway, I really expect the correction in short-term horizon. What I mean, what are the scenarios on BTC and what will happen next? We are switching to this topic because most of you, of course, are really curious to watch what will be. I'm not a future predictor, but anyway, we can suppose. Even on uh, 1 day time frame, we are forming the higher on the higher time frames. We are forming really clear levels for the next assault. At least there was all-time highs, $73,000. And what do I expect? I am expecting such a scenario when we have the correction after. First of all, let's stipulate the day when there will be this event. When this event happens, I mean the halving, I'm almost sure that short-term investors will be fixing their positions on the classical scheme, using the hamsters, using the retail purchases just to fix the position. That's why I really believe I could be wrong, but I believe that there will be short-term, maybe 5 or 7% loss fall of this instrument price, but then there will be long run correction, then maybe somewhere here the next really important event, namely approval of Ethereum ETF, and then there will be the next development of this the acceleration of this movement. And the most important thing that will be, I think, no sooner than June or July, the breakout of, or maybe in the end of May, the breakout of 73,800. There will be even more historical event than halving, because halving have a really long time lag effect. So there will be the third touch to the level and the breakout. That's what I really expect from the BTC. And what piece of advice can I give to traders who rely on this event as an opportunity to earn? I would probably forget about this idea, because the market is gonna be inadequate, unpredictable, and extremely manipulative. I would probably advise you to wait at least several days, or even take several days off, not to be in front of the monitor, because that's kind of psychological thing, just to be mm, be driven by your curiosity, sitting in front of the monitor, turning on the BTC, watching it, and sometimes it really leads to some gambling, especially on the market with high volatility. So I really prefer avoiding trading during such a periods when the market is manipulative, extremely volatile, and unpredictable, absolutely unpredictable. Then several days after the event, I'm watching the moods, I'm watching the greed index, I'm watching how the price working out levels, first of all, huge limit orders, other strategies, and so on. If the statistics of, for example, my team students, sorry, are stable and well, it means that the market is getting back to stable position, and we are turning into the bullish point from where we can start trading again. On this period, I dare you, many people will be disappointed with trading. Many people will lose their deposits. So we should just go through this with a minimal blood and sweat. Just my advice is not to trade during this period. So I'm really interested. What do you think about this? Maybe your thoughts are uh, more positive than my thoughts concerning the BTC first week after the halving. So the big players accumulate before the halving, sell directly after, and begin accumulating again. Yes, absolutely. That's my point of view, and I'm almost sure that it corresponds to the main idea of smart money. It corresponds to the idea of huge players, because huge players always need some event, need some manipulation to force retail help them to close positions, because their positions really require a lot of liquidity, and this a lot of liquidity, in fact, are the victims, are the newcomers, unexperienced traders, retails, and many just ordinary people that, in fact, through their losses, blood, and sweat, help fat guys to fix their profits. And you are absolutely right, Christopher. The logic is absolutely correct. In fact, I don't know what is the best period to load again. Right after the halving or several months before, But anyway, the principle is the same. Uh, so there are my main thoughts about the current market. I don't prefer. I'm not trading for about several days, and I'm gonna make a break till at least till the end of April because the market is absolutely unstable. Most of the traders have losses, and for sure, as I already mentioned, I have three main tips to check the market adequacy. What I mean, as I mentioned, first of all, we should check how market reacts on limit orders on densities, or we usually call them sizes. Sizes reaction. Uh, on such a kind of market stage, all the sizes in order book are usually cancelled or replaced. Most of them are just spoofers. I even didn't see. I even haven't seen the single market maker for at least one week, I think. The next tip is just to watch strategy statistics. Strategy statistics, I mean, when you, for example, trade breakout strategy. You trade breakout strategy. Let's imagine your core formations are inclined level, triangles, horizontal levels. What's bad thing on the bad market? It behaves like this. No really good breakouts. All the breakouts getting back too fast. The price rolls back, and there is no power. There is no stop losses, gear, liquidity, and so on. There is a lot of manipulation inside this formation when we, for example, break the level and then drastic movement to the opposite side just to count your stop losses. But when we have really good workouts of, for example, you have 5 breakouts in a row and 3 or 4 of them work out really good, it's the good sign. It's the sign that the movement of price is organic, not manipulated, but really organic. It means that the price driven by the real volumes, not manipulative volumes, but the real volumes of retails first of all, market makers, and only then huge players. And finally, what I mentioned. Totally forgot. Ratio, risk reward ratio. Risk reward ratio. On a really bad market, risk reward ratio is really, really small. For example, the best way to show the difference is the strategy of breakouts or smart zones trading. When we have really good breakout on really good market, our risk reward ratio is about 1 to infinity. I mean, at least 1 to 3 or 4 or 5. There is a really good risk reward ratio, means that in the long run you will have really positive result, even if you have several stop losses in a row. Or the example of smart zones, when we have small zone, we got a break of the structure. We're getting back to this zone. we're getting back to this zone, and that's it. From where the point from where we usually get into our trade, we place here limit order, and the problem is that it's a kind of movement. The really good zone, but it works 1 to 1. Most traders work 1 to 1 ratio. For example, we have something like this. We have 1% to the stop loss, and we have 1% potential. That's really bad potential, not very good, but most trades work no more, giving you no more than this ratio during all your trades. For example, 5 out of 8 trades give you 1 to 1. Others trades only give you 2 to 1. It means that we are going through really hard market. It's absolutely normal. It doesn't mean that you're a bad trader. It means that all we are going through really hardships, really hard times, and we just should skip trading during such periods. When tips, all these tips will show you the opposite results. Really good reaction on sizes, really good reaction on limit orders in the order book. Statistics of your strategy are really good. And finally, risk reward ratio work out really good. It means that the market is okay. You can trade. And the most important piece of advice is just when you getting noticed that something has happened, that something has changed in this list of rules, uh, immediately decrease your working volume to the minimum. Absolutely. To $100. If you trade, for example, $5,000, trade only with 100 just to check all these tips, all these parameters. If you checked it and you understand that the market is really bad, that we are coming closer and closer to, for example, kind of news release, like as you remember FOMC speaking when Powell spoke something with geopolitics or monetary policy, inflation rates, or such an event like BTC that the whole market is waiting for. We should avoid trading during these periods. Only most experienced traders can work inside the order book, but in most cases it's absolutely gambling because, as I said, the movements inside the order book are unpredictable. The sizes don't work. You can't see the really reliable entry point with short stop loss with absolutely clear potential. It's something like helicopter inside your order book. I don't prefer trading such market. So, what questions do we have here? I've heard that retail isn't fully in the market yet, like it was during the last all-time high period. I think the most part of retail will participate just during the halving. That's how it works. The retail is always late. When the retail comes in a really huge mass, it means to fix. It's time to fix. It's time to skip trading, or it's time to short, something like this. That's absolutely basics of not only financial market mechanics but human psychology. Ask your questions, don't be shy. Yes, absolutely, because here we are creating holding the stream for you. And you, of course, you can ask questions not only regarding to the topic of our stream, but connected with some questions of trading psychology, risk management, strategies, and so on. Short, when your uncle talks about, absolutely, yes, you're right. I remember a kind of book. I don't remember the author, but the story was that uh, the really famous Wall Street analyst was coming to his work, or he was on the way to his work, and someone, taxi driver or someone, uh, started asking him a question about the new, really grand and famous shares to invest. And that moment he understands that there was the exact time to fix profit to leave these shares, and he totally made a decision to fix all the position by this share, by this instrument. And next day there was a downfall, a great downfall of this share price. Next day or several days after. Yes, it's absolutely a good example, and I really like the phrase "short when your uncle talks about BTC." Yes, absolutely. I will recall this phrase. Sounds really good. Uh, just a moment. The next interesting question that I really want to ask you, if there are some traders who hold the BTC from the very beginning, or at least from the previous halving. Maybe some hodlers or holders here. Christopher, what about you? I'm not holding the BTC personally. I'm trading BTC only zones on spot, because for me as a first scalper, I just got used to have extra fast profit on scalping. That's why I it's uncomfortable for me just to invest and wait for a long time. For me, scalping on futures and scalping on spot are the basics. I'm only, I almost do not invest. That's the really strange, but sometimes I just spend 20% of my profit to transferring it to spot and invest in some instruments. But I think that investments and long run investments on spot is absolutely separate policy, separate trading, and separate instruments should be used. uh, First of all, fundamental analysis. When we analyze spot, when we analyze investments, we usually start with the project we gonna invest, like the team, the previous project of the team, the investors on the board, the market capitalization, maybe whitelist, the roadmap of the project, and so on. No, I'm hamster. Me too. Uh, had some near the very beginning when it was a cool little thing. Oh, yeah, Christopher, you're really cool. I really hope that you already multi-billionaire. I used to buy high and sell low, but thanks to you guys, I changed my trading drastically. And Dmitry, thank you. Thanks a lot for your feedback. Uh, Christopher, did you invested in other coins, maybe some other altcoins, and how do you believe in altcoins or only BTC? And if you believe in altcoins, how you prefer to select the instruments to invest? Okay, my idea is the next thing we should do is just to check the market. Just to check the market, what do we have? If we have some really good ideas, maybe we will do some trades. Just a moment. Usually before trading, as far as I'm trading mostly the zones during at least the last several months, I almost don't trade even breakouts. But here using Cscap screener, I usually rely on this main parameter, namely the nether uh, here, and we see that the maximum nether of 1.5 is really, really low nether. Nothing has happened to the market. I usually call this as a chainsaw kind of movement. Maybe you have some ideas just to watch something you want or something you hold, some instruments, something to check, something to analyze. Please, your ideas. I watch BTC for a pulse on market-related queries. Like hold USDT for perps. Yes, the same, absolutely. I had that BTC when it was the only option. Didn't hold for long. Oops. At least you didn't buy pizza for that. The first transaction of BTC was the purchase of pizza, if I'm not mistaken. Maybe someone recalls this story. The market is really inactive. Usually, when we have something to happen, some events, the market like is really a live creature waiting for something to happen. It really all the processes like in getting slower, the market is getting slower, the reactions are getting slower, and so on. And first of all, we see that during all the day, 5 minutes nether is no more than 2%. On the stable, really clear and bullish market, we have 5% nether, 10% nether, something like this. But now we see that that's really strange, especially on the background that in fact the market is okay. The market is still on the bullish stage because we still didn't break the structure on BTC. Let me show you. We are still in the long run position. If we break this structure, there will be the problem. Because then we retest this support, it will be resistance again, and we're getting, if we get lower 55, if we get to 50, there will be the risk to bullish market again. At least I'm even if it happens, I'm sure that that's just only the local correction, the local bullish trend. Anyway, I believe in BTC to the moon. That's what I was talking about. We see the really huge size, as you see, and we watch how it reacts. I'm almost sure it will be replaced or cancelled. Just watch. I will wonder if it's. That's what I said. That was cancelled. That's why we can't trade now on such an inadequate market. Of course, it could be the market maker, but even on really logical phase of the market, for example, we have something like this. We have some touch to the level. Here we have huge size to get a pullback. We expecting the breakout. Then we place here several limit orders to get a pullback, and this limit order cancels. That's really strange. That's really dangerous. So I really wish you to save your deposits, at least to stay at break even during this unstable period. Let's watch your questions. So, okay, guys, we will be finishing. Thank you for your attention. Thank you for your activity. And see you next session, next stream, or on the next video. Please put your ideas into the chat or into the comments under this video about the next videos, about the ideas on the next videos, and your ideas about the trading.